we've developed 3 words that embodies all of high net worth estate planning, right, Trevor?
That's right.
What are the magical 3 words?
We've got squeeze, freeze, and please.
Wow.
Yeah.
So those,
and they all rhyme.
all we have to do is teach our client those 3 words, and literally they will know all the tools that are available in high net worth estate planning. When I think about a squeeze, the way I would summarize it is, right now everybody's got a federal exemption that's just south of 14 million. Trevor, what is it, 13?
13,610,000.
See, I told you you'd know that. 13,610,000. That's how much we can give away with no tax consequence, right? And it's a free gift. It's a free transfer. But the squeeze basically is trying to squeeze 18, 19 million into a 13 million. How do we get 18, 19 million and convince the IRS it's worth 13 million?
The squeeze comes in, our one of our best tools, and Matt, I know you wrote an article, years ago about the family limited partnership being the GOAT of estate planning, right? The greatest of all time. And that the family limited partnership, or a lot of times we use an LLC these days, but that entity is what gives us that squeeze. And what I tell clients is, all we're doing is we're trying to say on paper that the client has less than they actually have, right? We're not actually taking assets away from a client or anything like that. And so we structure that partnership with voting and non-voting interests, or a general and limited partners. And when we make an irrevocable transfer of a limited partnership interest or a non-voting interest, then we go out and we actually hire an appraiser to tell us what types of discounts ought to be applied to the value of that non-voting interest. And when we get the report back from that appraiser, they come back and they say, well, one, there's a discount for lack of control because they don't have a vote and they can't direct when distributions are made or anything like that. And 2, there's a discount for lack of marketability. That partnership, it's created within the family. We don't have outside investors. It's not listed on the stock market, so there's not a market where you can go out and just sell your interest in that partnership. And so there's a lack of marketability, and the appraiser will say, well, because you can't just go out on the street and sell it to somebody else very easily, then there's going to be a discount.